On this podcast, you'll find interviews with high-performing, successful individuals in life sciences. On a weekly basis, we cover their proven methods, principles, strategies, and mindsets to implement new technologies that scale to meet the needs of people in our world.
Welcome to the Life Science Success Podcast. For those of you who don't know me, my name is Don, and I'm the founder of D3 Digital Media. We employ decades of life science experience and innovative technology to develop and define digital marketing strategies for healthcare companies so that they can build their digital voice, increase awareness, and drive leads, positioning themselves effectively in the competitive marketplace. And so if you are in the market looking for somebody to help you with digital marketing, building a website, SEO, we do all of those sort of things in addition to things like this. So a lot of people, whenever they join the podcasting platform, there are constantly comments about, how we broadcast here. And our guest today was one of the same. And so let me bring in Sal as well. So today on the Life Science Success Podcast, my guest is Sal Buscemi. Sal is a notable figure in the world of finance and real estate. He's made a name for himself through his impressive portfolio of investments and his leadership roles in various investment offices. Currently, he's serving as the CEO and co-founding partner of HRN LLC, a private multifamily office, as well as the CEO for Dandrew Partners Capital Management. So with that, Sal?
Don, when you were starting, I was taking down the name of your website to talk to you later because we have a lot of CEOs that could use your digital marketing advice for certain. Thank you for that. Thank you for the introduction. It's a pleasure and a privilege to be here today. Thank you.
Yeah, it's great. I mean, it's great to have you on, and it's interesting because, this environment right now for life science companies is an extremely tough one. So I'm really looking forward to our conversation because family offices come up oftentimes whenever we talk about, where are we going to find investments for drugs and the next generation of diagnostics and things like that. And so, I'm really looking forward to it. But before we jump in, maybe could you just tell the listeners just a little bit about yourself?
Yeah, sure. I'm originally from New York. I went to school in New York. I started out after school working at Goldman Sachs, and the reason is because I was able to successfully network into there. I thought I was going to be pre-med. I was pre-med. I thought I was going to go to med school. It didn't happen. I passed out holding a femur in a cadaver room, and after that point, the surgeon who I was working for, Johns Hopkins, top of the line. I mean, drove an Aston Martin. This is like a big deal. He told me, look, my brother just made partner. You should probably talk to him at Goldman Sachs. This is like in the 90s before they went public. Fast forward to that, because of what I did and the skill set, I had acquired. At the age of 29, I raised $30 million from a Park Avenue institutional money manager, which is kind of young. And it's a lot of money. And we were basically after the great mortgage recession, the great banking debacle, we were buying a lot of these assets cheap. And we made a lot of money doing that because we're deep value guys. And, either that or we do statement class, which is, the best of the best. And, at that point, it's like buying a Tiffany's engagement ring versus, one off the street. And what we did was we were able to channel a lot of those proceeds. And we noticed some things happening into the market that should not have happened. And what was happening is I was being outbid on certain real estate assets, and I wound up giving back a chunk of money to my investors. And they said, "Okay, Sal, what are you going to do now?" And I said, "Well, I'm going to go in a different direction because a lot of the families that had supported me in life sciences were smart enough to know they didn't know what to do in real estate. So I managed their money for them, and they said, well, why don't you put your guns on us and start raising money for us?" And Don, I can tell you it was a challenge of a lifetime in several ways because people really don't like investing in life sciences. The joke is, who likes investing in it? No one, because nobody wants to be polite enough to listen to you quant-splain to them, science and everything for 120 pages. Nobody wants to be reminded of the bad grades they got in biology and chemistry class. Nobody remembers that. So it was actually an interesting thing, and we had to form HRN because a lot of the stuff we were doing were life sciences, and my two partners have very strong life sciences backgrounds. One of them managing $6 billion for the Rockefeller family at the age of 26. for life sciences investing. And so we needed to start something. We called it HRN. And what we noticed is that when we started telling the story about life sciences and why it was compelling, and there's a lot more to it than just that, we noticed that every family office worth their salt all had a gateway drug into life sciences, and that was through their philanthropies. And those philanthropies are usually emotionally driven. They're very expense high ratios. The CEOs wear diamonds and gold. I'm not going to go there, but you never really have. They're well marketed, but they're very, very inefficient. And what we were able to show them is that they were able to make the same direct investments into world-class companies at their discretion without having to worry about where the last 10 cents on the dollar goes to, maybe some lab somewhere in Minnesota on something you don't believe in ethically they should be doing. I mean, this is real life. If you follow the rabbit hole, what happens? It sounds like a ProPublica story, but it's not. But this is like, what happened. And since then, with the partners and everything, with the finance backgrounds that we have, and their due diligence backgrounds and their network, we were able to amass a tremendous portfolio. We're very proud of not only the investors we've had, but of some of the deals we've been in. And they all follow a common convention here. And the convention is really, we like to invest in pedigreed founders with multiple exits under their belt, not multiple finding company. Anybody can do that. Multiple exits that they were involved in. And that's worked out really well, because when you look at these companies today, or a profile of venture today, it's very difficult for people to raise money because, what we're seeing with interest rates and the economy the way it is right now. And, it's become very prolific. And a lot of those companies have just gone poof, right? I mean, look at Silicon Valley Bank, that went poof. But the strongest are the ones who, who've been through this before, and we bet on the jockeys, not the horses. So I hope that was a good intro.
It was. And I wanted to also because of the mention just a second ago with regards to Silicon Valley Bank, you've written several books about, real estate and investing and other things. The one book that I know that you deal with a bit of the volatility in is your book Yield as well. Do you want to mention just a little bit about, what you've written about so far? And
Yeah. So after the great banking debacle, there were a lot of people who absolutely lost their life savings because they were putting it into these private hard money funds. Now that's generally speaking, by and large, that's a safe investment because it's secured and insured. However, and we do the same thing in fine art, right? Through a family in Beverly Hills. It's just, better collateral, that's all. And what people were asking is, how do you do it the right way? So I wrote the book called Making the Yield, and how to make these loans without having a guidebook to protect you, the belt, suspenders, and life jacket, sort of to speak, so that nobody would get into trouble later on as related to, making loans to people they shouldn't have, or in areas where they might face regulatory issues with it. And then afterwards, I wrote Raising Real Money, because people wanted to know how to start funds, but also more or less from the ethical reasons and how these boards are run, and, the proper way of really putting it together. And that was that's a good sell. That was not quite a big bestseller. I've just re-released it and bought the rights. And the reason is because the same publisher that I had at one point, the book was selling, my first one, for as high as $1,800 on Amazon. And now that I bought the rights back, I can remarket it, and, it's a whole issue, but yeah, it was a fun time.
Yeah. I mean, it was one of the things that I remember reading in your bio is just the expense of the one, one of your books. So, and you're on Amazon and things like that. So, I mean, one of the things,
free market, right? Anybody can be a best-selling author at 3 a.m. on a Tuesday, but to have to have a price, that's a different thing.
I mean, to be honest, I absolutely love the fact that, you in a lot of ways you can control kind of the release of your own book. I have my book as well, Overcommitted, that's on Amazon, and, similar sort of story. It's good to be able to see your own metrics in terms of, how your book is performing. And also, is there anything else that you could do to possibly get it out there to people that could be influenced by it? So, yeah.
Mm-hmm.
So, For years now, I've heard about, family office investors, potentially being interested in investing in life science companies. First of all, maybe it might help just a little bit to talk about what is a family office, and also, are you making investments in life science companies today?
The answer before I forget is yes, we are, and I'll give you a whole case study on one. And answering your first question is a family office usually is determined by its size, and it's a term that's sort of been abused a little bit today, sort of like hedge fund was in the early 2000s. And it's basically a family that has over $100 million in investable assets, and that is, the minimum requirement because it costs on average to manage money about 1% of that per year. So in order for it to make sense, keeping it with inflation, although, all of that, you need to have at least $100 million in order to cover those costs for accounting, insurance, and all that kind of stuff. And these families follow different conventions. They can invest in whatever they want. Now, there's two types of families. There's the emerging families who have received a lump sum of money, and they don't know what to do with it. And this is someone who's had an exit, maybe in a life science deal or, in a technology deal. Somebody had a big exit. Well, how big? If it's 9 figures, then that's serious. Because at that point, you get past the point where you need to have the new Ferrari, and all the other glitz and glam that comes with it. You're sort of looking at yourself now with a purpose and like, what's my legacy going to be? And whether that could be like building real estate for your children, or putting together foundations with your name on the side of a library in bright copper red. Sure, it's a different thing at that point, and the motivations are different. And the other ones are like more established families, and they are more like institutional run. But these are the ones that are around $1 billion plus. And and on the most extreme side, you can look at like the Rockefeller family, but there's also like other families who do this. And another one would be the founder of Zara Clothing, Armand Satsio Ortega, and through his family office, he makes a lot of disparate investments into different things. But he's also putting out like $1 billion a month, because a year in real estate. And the reason for that is because his companies sell so much product, he needs to channel the cash somewhere. So that's really, the family office structure, and it's all about what they, and it becomes an issue because some of them want to follow their gut and some of them don't, and then you see schisms, and then it's like Succession is a perfect example of all this. They're still maybe operating the company, maybe they're not, but this is the internal politics that goes on. One wants to save the world, the other one wants to like bet it all on crypto. We deal with the people who want to save the world.
Perfect. And then, I mean, maybe we just dive a little bit more into, the case study that you mentioned as well in terms of life sciences.
So, we like to look at people. I think that in life sciences, you get overpaid for solving big problems. And an extreme example of that, not in life sciences, would be Elon Musk. And what I like to look at are smart people who are smarter than I, going into investments. And when we look at, for the founders out there, I have a saying. I said, the cap table is the proverbial soul of the company, but its board of managers is his conscience. And so, if you get through that first, and then you understand, okay, this is a smart people, regardless of the idea, regardless of how in love you are with, something that could probably be knocked off in China or by a kid in the garage. You have to look at who the investors are, because that's really going to be a telltale sign of what it is. And so after we clear through that, we get to the CEO, and we find out that the CEO, that this company we've invested 2.8 million into, has already had 15 exits, and this company, Thrive Bioscience, will be his 8th unicorn. And when you look at that, you understand that, yes, this is a little bit of gray hair. We like it. Very sophisticated families. We like it. And there's a tremendous amount of depth there, because if you've done this 15, maybe 17 times, you've been through a lot of cycles. You've seen high interest rates. You've seen low interest rates. You've seen the Great Recession. You've seen 9/11. You've seen everything that can possibly go wrong, including Silicon Valley Bank. Right? Thankfully, in our industry, nobody lends on life science company startups, right? So they're not levered. They just, they're sort of reliant upon private capital, mostly from wealthy families and wealthy individuals. So, it becomes much easier at that point to build a portfolio around that. Where people deviate from that, from the investing side, is that they wanted to believe in it, but it's hard. They have too much emotion. They really want to help their son-in-law who's somewhere in a lab trying to find the next, CAR T replacement,
Right. Yeah. Yeah.
right? However, he's never done it before. He's, who knows how he is, socially and emotionally. And you just don't know if they're really going to have the grit and the determination to really pull it through. And that's why we bet on the jockeys.
Oh, perfect. Yeah. And I'm well familiar with Thrive as well. And yeah, I
Oh,
mean,
okay,
it's a,
Tom. Yeah,
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 yeah.
yeah. Okay.
Very
Well, I'll
good.
have to tell you about. I have to tell you a funny story offline about that. So we'll talk about. He's a great
Perfect.
guy. Yeah.
Yeah. So in terms of and we were talking about this before the show as well. You have another book that you wanted to mention as well for founders that are looking to raise funds as well. Correct?
Yeah, so this is where probably I'm gonna, some of your viewers might get kind of agitated, but I moved recently to Miami, and because of, people I knew in New York who came down here, I had a very warm welcoming. And one of that welcoming was a partner at a law firm over here. And the partner at the law firm who did a lot of private equity stuff and venture work said, Sal, you got to come to these Florida venture conferences. I'm like, okay, this is interesting. So I go to these Florida venture conferences. And I have a big red tag on it that says allocator, which means investor. So you are getting bombarded. I mean, this is worse than the JP Morgan healthcare conference where you have like the guy with Minnesota place in the lift picking you up. You're an
Right?
investor.
Yeah.
Interesting. Yeah. So these guys are following me around, and they all show up. I don't know if I can show it, but they go to meet you, and they all have their iPad on their arm, and you're like, oh gosh, I'm going to be pitched. And sure enough, they go through the whole thing and they just go right into it. It's like asking for marriage on a first date, on a speed date. It's just awkward. And, we call it being French fried because if you throw a French fry on the beach, all the seagulls come. Anyway, moving forward on that, I noticed that a lot of them did not have any bedside manners. And another gentleman who I met who's kind of influential, and he's actually has a company that is really amazing. His name is Andrew Satz. If you follow him, SATZ on LinkedIn, his company won $150,000 because of some of the material but small changes I told him to make in his investment. And what happened is that I have a copy of it here. I'll show to you. I thought I did. Here it is. Okay. Is that I got a little bored moving to Miami. Not a lot of people get bored in Miami. I mean, you can go out every night and have fun. However, to stay out of trouble, I thought, what this world really needs is a book on bedside manners. And especially with the academic class, they're shy, they're timid, they don't want to be pushy. And, I told them that, today attention is the largest, the most scarce commodity there is. As a podcast host, as a media person, this, right? Everything balances on attention. And I said, you have to really understand that you have to stay in front of people's attention. You have to have their attention somehow, whether you're in front of them or not. And so what I did was I put together a little booklet. It's available on Amazon, but if you go to callingthecapital.com, you'll be able to get a copy of it for free. And then you'll be on our list and you can see all the stories about Tom and our CEOs and all the other things that we've done. But really what it is, it's really a great, it's 20 different strategies to be able to put things together in a way that will compel your investors. And it's interesting because a lot of the things that we've done is, for a family to be compelled, for example, to sit through a pitch, maybe with a Nobel Prize winner, for a company, that we invested into, if they invested at least $500,000, he would have lunch, with their family, with this Nobel Prize winner. And the name of the company is Apricity Health. And, we're working on another company with that gentleman too. The point is that people are going to do that just to take the selfie, to put it on Instagram, right? I mean, they already know it's a great company, but this is going to push them over the edge. And that's what a lot of the thinking is today is how do you make these people feel really good about themselves? For you to get the check. And we love giving away, we have Thrive fleece vests, like in Wall Street, the Patagonia ones.
Sure.
So we'll have a
Yeah.
Thrive one made. So all our investors get a Thrive vest, so now it's like to them a status symbol that they were able to get into to this deal before a big, large investor, who wasn't us but came through us, came in, and they want that cocktail conversation. They want to be able to one up their friends who are too busy doing other things and bragging about it as well.
Amazing. And I mean, the one thing that I oftentimes talk to founders about as well is just this idea of telling the story about why you're doing this and the impact that it's going to have, not necessarily the science that's going to carry over, this idea. Once somebody's bought in terms of, the idea of possibly investing, then they may want to dig further into the science to understand, is it really sound? Is this something that, I'm going to get into that eventually, just absolutely everybody else has figured out?
No, they're not. No, they're going to, what they do? They're going to show it to, that's the top 1/10 of 1% of investors. The rest are going to show it to their college buddy who is a biology major and say, what do you think of this?
What do you think? Right. Yeah. I've had that happen as well.
Free
yeah.
advice. Free advice.
That.
It's what it's worth, whatever you lose in the investment. Honestly, I've seen it before. I've asked people ask me for free advice on real estate deals, and I'm like, how much are you going to put into this? 250,000. And then it's like, really? You want me to work for free? And I used to do it for steak dinners. Now we have a whole consulting agency on that, where we consult on value.
Yeah, right.
Yeah. But I think getting back to your point is, you got to make it really attractive to the investors to want to be, because they're not going to think about the math. Nobody remembers data. It's the story that's going to sell. That's really it. If you think about Star Wars, nobody goes there because they see math, right? There's no math in Star Wars. Nobody wants to be quant-splained. Nobody's going to remember numbers. What they're going to just remember is, what is the premium I'm going to get if I invest in this deal?
Yeah, absolutely. And then in terms of your overall career, what is some of the best career advice that you've received?
I am, this is a I learned this from a family office, actually, from someone who's in my third book, Investing Legacy. And that's basically like a salacious profile of like the top 1,001% of society, investors and what they do. And I have, people who I used to work with in the book. I sit on a board of Genius Biotechnology with Stephen Rockefeller, for example. So like he's quoted in the book. And and the reason why I moved to Miami is this. And it's so cliche, and I wish I could rephrase it. Your network is your net worth. And if you spend a disproportionate amount of your time building relationships, you're going to get back, man. I mean, this isn't something off of Instagram or feel good off of Pinterest. It's God's honest truth. And because of the relationships I've had, because I've put people in books, I have been able to get into companies like Thrive. I've been able to, build a reputation around that and build a reputation to actually make an impact into these companies. Like Thrive is going to replace the microscope. Better science, better drug discovery, right? Better data, better drug delivery. That to me is my legacy, right? Affecting something. I don't know if you saw in the New York Times, New York Post yesterday, Don, but some disgruntled janitor after hearing a beep too long, and you can Google this.
Oh yes,
shut the power off in a lab with 10 years worth of data. That'll never happen again. That'll never ever happen again, right? So that's my legacy. But it's gotten to the point now where we're actually involved in a much higher profile deal. May or may not be involved with Elon Musk, but because of those relationships. And if you invest a disproportionate amount of time in your relationships, number one, they're going to write checks faster. You got to treat investors like they're a prospective spouse, right? Because they are partners, and they whether it's us and a CEO who's wordy a lot, and I have to talk to him only on the treadmill because otherwise there's no urgency for him to get off the phone, or your investors who want to know what's going on. You have to just go first and foremost and treat them like the best customer service, right? Not being like, yes, I'd love to talk to you about this. There's one guy I have to talk to. He really upsets me because I send out lots of emails. Interactivity is the new currency. That's how you build a brand. That's how you build a relationship. Everybody has become transactional. And I think it was the crypto crowd, coming in, fast money, transactional. Families aren't like that. It's not because they're afraid to lose the money. It's because they don't want to embarrass they're even more conscious of their reputation than someone who has nothing to lose is. Does that make sense?
It does. And I mean, it's interesting to me because so I have a mail list that's relatively small, right? So I started late in my timing in terms of building an email list overall for my newsletter, which really focuses in on, scaling organizations as well, which is more or less where I consult at. And so it's funny to me because I've had people write me and say, you email me too much. Similarly, and
No,
it's like,
no, 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 no. Yeah. You know, let me
right?
tell you my theory on this. Okay, there's two theories on this, and you're a marketer. Number one, if you have money invested with me and you're not opening my emails, you have a problem.
Right,
There's a problem. Okay,
right,
there's, I mean, and you know, I don't know where it says it in the Bible, but your heart is where your treasure is. Like that, to me, I'm commanding their attention because they don't know if it's good news or bad news that's coming out. Number two is out of sight, out of mind.
hmm,
And today, if you look at it, that you have, this is something we're all. I mean, this is probably you know, probably a plug for your business, but you have to have media today as a CEO. I've
exactly.
compelled my CEOs to go out and be on life science stuff. I was on another podcast and I get another email from this guy, and one of my CEOs, Dr. Chris Apfel, is going to be on his, on his podcast, from Kerasu for him, like head of life science, but he's one of my CEOs. I'm like, good for him. He's doing it, because this is how nobody knows who you are today. Your resume is LinkedIn. Your social media is LinkedIn. You can
Right.
argue politics with it, or you can post stuff like I do, like this on there, continuing to build the message and build the tribe as it speaks. But you are going nowhere as a CEO today if you think you can just sit in a laboratory and go out and ask for money, because I can tell you it's going to be a very hard slog to do that, where you're trying to develop something, you're trying to bring it to trial, but you have to go out and raise money because you need another $150,000 to bring it to trial. I mean, I know these stories and I see it daily, not daily, but close enough where you can understand like what the CEOs are doing and what they're not. And working with someone like you in concert, because I'm doing this myself with raising money, is the most important thing to do. That's how you're going to capture attention. Remember, what you post on social media, your investors are going to forward, right?
Right.
They forward around. I mean, we spent a lot of money putting together lush production for one of our real estate deals because we wanted our investors to feel good. It wasn't about me. It was that thing going WhatsApp and WeChat around the world probably like 50 times. I had like 5,000 views in the first 72 hours. I'm like, what? There's only 20 investors in here. What's the problem? But people forward it because to them it's a sign of status. So working and putting together your media is the most important thing to be able to leverage your reputation, but also your messaging so that you can give them updates all the time. I give little small updates. We had a Vive Solutions, this isn't small. They were the youngest team in the history of the FDA to receive PED approval for their artificial defibrillation device that you can power with an iPhone. And if you look at all the problems, unfortunately, that we're having with kids dropping on the ball fields,
Right.
you can bet that every mother in America is going to have one of these in their purse, right? It's just the way it's going to be today. And yeah, we're very proud of that because that is going to influence and leave an impact.
Amazing. Well, and so there are three questions that I like to ask every guest. What inspires you?
Right now I never like to look at the past, but if you read my third book, Investing Legacy, you know that I'm the son of a PhD. He was an organic chemistry professor. I did not go the route of academics or medical school. Thankfully, I don't know what that would have looked like today, to be honest with you, Don.
Right.
But what I like doing is being able to stack my talents and use my talents to be able to, at this point, put together a formidable portfolio of life science companies. Now, that's not just for the profit of it, because these families don't invest for the profit, really. It's to be able to say that I was able to help 6 million lives by detecting, some sort of, disease that they didn't see coming, or, leave an impact where lives have been saved just using the artificial defibrillator. I mean, that's a technology that has been updated in 30 years, and now it's powered by iPhone. I like doing that, and I like being able to like make an impression on people because I don't have any kids. I'm not married, and at some point when I expire, what's going to be my mark on the world. And that gives me a tremendous amount of, personal significance, knowing that I'm continuing to, to help out humanity. Now, of course, we're going to do other things too, where humanity will benefit from, working with other people. But this has really sort of given me doing this for the past 10 years in life sciences has really given me an eye-opening view of really, what really goes on and the impact that a lot of these companies make that you'll probably never hear from anyone else because there's just too much noise out there. You're never going to see a story on Fox or CNN talking about how these wealthy families, poor them, are investing in these life science companies for these drug discoveries and therapies.
Yeah, absolutely. And then what concerns you?
Warren Buffett said something the other day. I've only been to one of his shows in Omaha. It was in 2004. And the jubilation there, even after the dot-com bubble, was just off the charts. And he said something, and he's been doing things. And again, I'm a financial nerd. If you ask me about sports, know nothing. You ask me about baseball, boring. I mean, I just, I'll fall asleep. But if you follow me on LinkedIn, you know that I'm quite like, I'm always on, talking about things in finance, venture, macroeconomics, really, and that's really what has become sort of my passion, if you will. That's what I read. I'm not reading the sports column. I'm not reading the cartoons. Like, I'm always looking for a reason to have a blog post or something. And what concerns me is that I think, and I don't want to believe it, and I don't think it is, but there's going to be certain circumstances. And if the dollar loses its reserve currency, that's going to be a problem. And I'm not saying it's heading that way, but Warren Buffett sort of intimated that, America's best days might have been behind her. And now he's, going, I wouldn't say all in, but he's making aggressive bets in Japan. But that's not to say that things can't turn around or they won't. Everything in this country, thankfully, has a fuse because of our democracy. However, current events, if we were to destabilize, the petrodollar coming off of the, dollars of world reserve currency, Americans don't know what that looks like. And, we saw this a couple of years ago when gas was like $9 a gallon. This country was not built on for $9 a gallon.
Right.
Just nothing operates on $9 a gallon gas. So those are some of the things that, sort of concern me, at the moment. But I think that those problems will work themselves out. I think Americans tend to be very ingenious when it comes to solving ideas. I think, we've seen the best of humanity, and hopefully, we'll see things change, as it relates to the strength of this country.
Absolutely. And then last question, what excites you?
It's a good question. What excites me, I do like writing books. I know you and I were talking about the book. Tom and I started a book club together. We were exchanging books. Our CEO, I'll tell you about that. That's what I was going to tell you. But I like writing books. What excites me is meeting new people, and really it's just sort of like building things. I like building. I'm only happy when I'm building things. And
Yeah.
I think a lot of people, and that I've seen, friends, I'm a little older now. And, I see, I talk to them and where they are in life and everything. And I'm not saying like I'm doing incredibly, I'm incredibly happy or anything. I've been through a lot personally. However, if you look at them, they're not happy for one reason. And it all comes down to they're not building anything. They're too busy, enjoying themselves or trying to, escape from something. They really don't have anything to look forward to. And me building this family off of some of the world-class investors who I'd love to tell you maybe offline, that to me gets me out of bed in the morning because, as I like to say, or my crew coach in college said, any dummy can get drunk, but, to win a championship takes a tremendous amount of, determination and discipline. And I wasn't that great of a rower, but, I like to think I'm a much better investor, and I apply that, that principle to, what I do. And that's why, I write these books rather than, going out. Now, there's a season here in Miami and the networking, I have to, you're out, but that's a whole lifestyle change. And, I do that because I'm excited to meet these people and see how big of a tribe I can, sort of channel into, I don't know, Thrive or, SciTech development or Genius or Immunicom or Vive or other things. To me, that puts a little kick in my step.
Yeah, absolutely. And I mean, I completely agree with you with regards to the networking component of it, right? I mean, it's funny to me because I've had people reach out to me. I was with GE Healthcare for 18 years. And,
Okay, yeah, yeah.
they say, look, in my 18 years, I only connected with like, between 100 and 200 people on LinkedIn. I'm just like, how is that even possible? I mean, I personally touched over 2,000 lives while I was there, just in my day-to-day interactions. And so those
Sure.
people connected to me before I even left the company. So it's interesting to me how people treat these connections as very shallow as well. And the reality is, sure, you can have a shallow connection that maybe the person doesn't know a lot about you, but through all of your outreach, Sal, I mean, I'm sure you're having an absolute impact on the network that you have, and they know what's going on with you, and they can use that as an opportunity to tell you about what's going on with them.
Yeah, and I like that too because there is some interactivity. Granted, the interactivity I get are 32 megabyte pitch decks that are sent to me. Like, hey,
Right.
just boom. Like, why did it take us so long to download this email? Oh dear, and it's like the sneaky WhatsApps and everything that come in. But it's really good. And as much as I say that I live I like doing this stuff. There's a time in Miami where it's like a period of 3 months where you're just out and you have to have it set where you just know that you're going to be between 8 and 11. You're going to be out. And then I come home, as long as I'm in bed by, midnight, I'm up at 7:30. I work out and I start all over again. If I get tired before going out, I'll take like a nap or something. But, I force myself to go out there. If I didn't force myself to go to a very rainy breakfast meeting in an art gallery far away from where I lived in Manhattan, I would not have met some of the families that are in the book Investing Legacy that I wrote. Right. So, that is the real, I think that's the real spice of life right there is you got to treat it like you would anything else. And, just if you're a workout fanatic or a vegan, you got to treat the networking with the same amount of, gusto to be able to move the needle and do something meaningful.
Yeah. Well, thank you so much, Sal, for being here
Thank
on the Life
you.
Science Success Podcast. I greatly appreciate you being here and sharing
Thank you,
with
Don.
us everything about your world. So thanks a lot.
Thank you very much for having me. I had a great time.
Thanks a lot. Thank you for listening to Life Science Success. For complete details about this podcast, including show notes, how to get in touch with guests, and more episodes, please visit www.lifesciencesuccess.com. If there's someone you'd like for us to invite to the show as a guest, please let me know by sending me a message at the podcast website. Please click subscribe on your favorite podcast app, share the podcast, or tell a friend about it. And last but not least, rate the podcast. Thank you again.